The collapse of FTX is in focus again right now ahead of the trial of Sam Bankman-Fried. What do you think was the main takeaway from that massive failure? How has it impacted the industry, and what's needed to prevent future events like that from happening again in the crypto space?
So I think the thing people should understand about FTX is it's not actually a crypto or blockchain related issue or collapse. FTX was more of a traditional financial entity or institution that was just dealing in crypto assets. So there really wasn't any aspect of how their systems were built or any guarantees from blockchains or private keys that should make people think that it's somehow a failure of blockchain technology. It's really the failure of an institution or an entity that mismanaged some of its assets. So it's not really a failure of blockchain technology. It's just another failure in the long series of failures like Silicon Valley Bank, Enron, and others, right? The thing that I think the crypto industry has learned is that even if you have a centralized financial institution dealing in crypto assets, you still need proof about the solvency and reliability of that institution. And what that's led to is the adoption of something called proof of reserves. So we're the largest provider of proof of reserves. We launched it over 3 years ago. And what it does is it proves the balance sheet of the underlying entity or stable coin or gold coin or really any asset. And so what happened after FTX was everyone quickly scrambled to prove to their users that their balance sheet was solid and that their institution was solvent. And proof of reserves played a very important role in that because instead of relying on somebody's word or relying on an auditor to tell you something, you're getting information every second. And that information every second is validated and proven, and it's cryptographically proven to create what we call kind of a verifiable web. And so this kind of adoption of proof of reserves and this better proof of the solvency of various institutions and stablecoins is, I think, what's come out of the FTX issue so far.
What would you tell those people who are skeptical of proof of reserves in terms of painting the full picture as it pertains to crypto firms?
I think they should be skeptical. I think we should all be skeptical, and I think we should all become educated consumers about how everything works. And you're right that proof of reserves can only give you a snapshot of a certain portion of the existence of an entity and its solvency. But actually, there are other proof of things, proof of liabilities, proof of solvency. Really, proof of reserves is just the beginning in a long line of things that go under the heading proof of everything we would like to know to properly manage our risk. So I see a lot of other proof of things coming out and becoming widely adopted because proof of reserves does show one piece, but that piece of what the balance sheet is and what the assets are often is the piece that fails most. It's the piece that people hide. It's the piece that people find out and are surprised by. So I think it's definitely a big improvement from an annual audit where some auditor checks something and no one really knows what they checked or what it looked like or what actually happened. But I think you're right that there's space for much more proof of things that prove many other things.
Last year was the biggest year for crypto hacks, according to Chainalysis. However, the blockchain analysis firm's mid year report revealed that crypto crime was down 65% compared to the same time last year, and that revenues from scams and hacks were the most impacted. That being said, we're still hearing about several hacks in the space. Just this week, the Hong Kong based crypto company Mixin announced it was breached with hackers stealing around $200 million. What do you think is needed to prevent this sort of thing from continuing to happen in crypto?
Well, I think the numbers are down because the industry isn't growing as much as it was before. And I think that the thing that's needed for these things to be stopped is for people to stop using decentralization as a buzzword to acquire users and capital. So in the case of Mixin, you have a situation where you have a single server in a cloud provider that apparently was breached and led to the loss of funds. If you have decentralization, the breach of a single server that leads to loss of funds isn't something that should be really possible, right? So at the end of the day, I think that the thing that we need to do is become more educated as consumers. We need to understand the levels of decentralization and the actual security provided by these various systems. And that security needs to be provided with real decentralization, where you have multiple different levels of nodes and networks and technologies. That's actually what we specialize in. And we have 5 different levels of security that we view decentralization providing. And we categorize many of the things that get hacked as being at level 1 or 2. So at the very lowest level, where they basically claim to have decentralization, but they actually don't.
So, what do you think is preventing mass adoption of crypto? Is it the erosion of trust that has transpired following the collapse of FTX? Is it all the hacks that we've been seeing, or the lack of regulatory clarity here in the US, or perhaps a mixture of all three? What do you think?
I think it's a mixture of all three. The crypto industry is a very cyclical industry that's driven by more people getting into it and wanting to participate in larger and larger numbers, which generally increases the amount of assets, the value of the assets, the amount of users interacting with the assets. Things like failures that lead people not to join the industry, various roadblocks of a legal nature, and other issues like security issues generally stop the flow of people from seeing it as a reliable place to put value. So generally speaking, I would say that the cyclical nature of it suggests, and I've been in every cycle, right? I've been in the crypto industry since 2010. So it's definitely extremely cyclical. The important thing is that when the next cycle happens and when the next influx of value happens, that the systems and entities and institutions and smart contracts can handle that much value. Because the story is basically always the same. There's a big boom in interest, there's a big boom in demand, there's more assets, there's more usage, and then that boom reaches a kind of fever pitch or a point where value is lost or value is mismanaged, and that loss and mismanagement basically stops, or basically stops that part of the cycle and begins the downward part of the cycle. So I think what's very important is that as people build infrastructure and systems in this industry, those infrastructure and systems are built in a way that they can handle these greater amounts of value that are going to come in the next cyclical boom, which I think is what everybody expects to happen in the crypto industry, and in most cases, I think, even outside the crypto industry.
Chainlink's conference, SmartCon, which highlights industry advancements, is taking place early next week in Barcelona. What can people expect?
So SmartCon, I would say, is the conference where the most advanced smart contracts are showcased, because the most advanced smart contracts are really a combination of on-chain code and oracles, which is what Chainlink is the main framework and leader for. So I think people can expect a lot of the leading smart contracts in DeFi, gaming, insurance to be shown there, explained how they work, and explained in terms of the business models, the adoption, the value. The other side of the SmartCon conference that's growing even more than last year is the capital markets side. So we have many banks, financial market infrastructures, CSDs, exchanges, and more traditional financial systems players that are now attending the conference and speaking at the conference about the blockchain's role and smart contracts and Oracle's role in creating a new global financial system backed by cryptographic truth. And then the final part that's kind of new at this year's conference is the AI symposium, where we're examining the intersection between blockchain and AI. And Oracle's, the technology that the Chainlink network is the leading provider of, is actually the place where blockchains interact with AI the most, because oracles are the place where blockchains interact with the rest of the world and where those kind of computations happen. So I would say it's the cutting edge new contracts, the capital markets, and the intersection of blockchain and AI.
Last time you were on the show was back in June, where you discussed a new partnership with interbank payment processor Swift to deploy blockchain technology. How is that partnership going now that several months have passed?
That's going very well. So we've released together with them a report summarizing the findings of our work together. That report was extremely positive because all the key goals we wanted to achieve were achieved. We were able to use Swift messages, widely used existing banking standard, for initiating blockchain events through CCIP, the cross-chain interoperability protocol made by the Chainlink network. We were also able to connect multiple private bank chains so that different banks on their respective chains could transact with each other from their chains. And we were able to connect those private bank chains to public chains so that those private banks could also transact with public chain contracts like DeFi. And so all three of those goals were successfully proven to work securely, efficiently, and in a scalable, efficient way. And that is now leading us, that led us to announce multiple things at Sibos, the big SWIFT conference, the largest financial infrastructure conference in the world. We announced things there with Australia New Zealand Bank, one of the largest banks in APAC with over $1 trillion under management, and many other entities that we're working with. And really, I think we're kind of off and running in getting the capital markets connected to blockchains and efficiently, securely interacting with each other's blockchains, and soon enough, hopefully, with public blockchains as well.
Sergey Nazarov, co-founder of the Web3 services platform Chainlink, thank you very much for that comprehensive insight on many different topics in crypto.
Thank you for having me. It's my pleasure.